So this has been a highly requested topic anytime we do a business related event. So Nicole, my VA, actually introduced this person to me, and now we've been working together for over a year now, right, Rhian?
Yeah, I think so.
And it's just been like the best investment ever. And so I think this is such an important topic. That's why we included it in this conference, along with the fact that it gets requested so many times. So, Rhian, thank you so much for joining us today. You're going to be covering Bookkeeping 101 for SLP business owners.
Thank you for having me.
So here's our agenda for today. We're going to start with some introductions and backgrounds. Then we'll get into some bits about compliance and tax considerations, how to set up your books for success, some bookkeeping essentials and tools that you need, different payment options that your clients can pay you or you can pay contractors. And then we'll wrap up with references and closing remarks. Rhian, how about you go first and introduce yourself to everyone?
Okay, so I am Rhian. You can probably tell from my accent, I am not originally from the US. I'm originally from the UK. I currently live in Kansas City. We've been here around 10 years. I have an accounting degree from a UK college. And then when we moved here, I kind of decided that I wanted to not go back into corporate work and focus on being home with my kid and building a business that I was able to kind of work around her and support other people doing the same thing. So I started my company in 2017 and we've been kind of growing ever since. We now have 3 employees full time, and I'm hoping that we're going to add a couple more soon as well so that we can continue to kind of help people. We offer bookkeeping, accounting, tax prep, and payroll services, primarily focused at female entrepreneurs, although obviously I don't mind helping men. But predominantly helping female entrepreneurs to not feel that bookkeeping and accounting and processes and finances are something that gets in the way of them kind of starting their business or from growing it further. Quite often it can be kind of a roadblock that stops people from making more money, for feeling like they're going to owe more in taxes or that they're going to be arrested by the IRS. Really, we're here to kind of support those people and have be a part of their team so that this is, something that can propel them forward in their businesses as well. Yeah, we have about 100 businesses that we work with currently on a monthly basis, and then we do between 300 and 400 tax returns every year. So yeah, that's really it.
Amazing. Well, I can definitely attest to the fact that Rhian and her team make it very easy to understand like the numbers and like what's going in, what's going out, if the business is profitable and whatnot. I already explained my bio in the other courses that are a part of this event, so you can read that here. But I figured I would like tell my story about how I came across Rhian. So Nicole and I had been working together maybe for about a year at that point. And I had never, obviously, I mean, if anybody here had like a business course in grad school, please let us know in the chat because I definitely didn't. But I always had like that entrepreneurial spirit. It's in my family. My dad's an entrepreneur. My in-laws are entrepreneurs. My husband is. And so like right in during my clinical fellowship, I already felt like the urge to, start something like solve a problem. And so that's when I wrote the Luna's What to Do book series with Kim, and it was published. And then we started like the podcast to kind of market the series, but then found out like SLPs were more interested in the podcast and not parents. So kind of pivoted to support SLPs. And fast forward, that's what we're doing today through these conferences. But I never had like formal business training or courses. And so I found that, every time I was making money, I was spending it. I was always putting it back into the business. But it became a very expensive hobby. And because I had a full-time job, everything that I was making through my full-time job, I didn't have kids at the time, I didn't have student loans, I had paid them off, was going back into my business. And I'm like, okay, like it's 4 years now into this business. Like, when am I actually going to make money from this? And so I don't have to like work a full-time job and then have to do my hobby or my business after work and on the weekends. And so I was like, just doesn't seem right. Like, why does this feel like I'm on a hamster wheel every single month, And so I talked to Nicole And Nicole was like, you should really talk to Rhian. She's amazing. Like I use her for bookkeeping. She's awesome. So I think Rhian, did I cry in our first meeting? I think I might have cried in our first meeting.
I don't remember. I don't remember, but
I
if
do.
you did, you wouldn't be the only person.
I was so overwhelmed. Numbers are not my thing. Like anybody else who can relate to that, please make me feel less alone in the
Yeah.
chat. But numbers are definitely not my thing. And Rhian just did such a good job of breaking everything down, making me feel like less alone, that this is like a very common problem that people have.
Hmm.
And we got everything cleaned up. And I'm happy to say now that I no longer am working my full-time job. Last year was my first full year completely self-employed. It was a small profit margin, but it was a profit
It doesn't
margin.
matter.
Wasn't in the red this time. And I didn't have any like supplemental income from a job. So huge, huge thanks to Rhian for helping me get it all together and just like kind of know what's going on in my business. So just wanted to say thank you for that.
No, thank you for letting me be part of it. Like I said, I always feel like, it's your business, it's your data, and it's all you. I'm just here to support and hopefully give you some confidence that the numbers are there to like propel you to kind of go and do what you want to do. And like I said, just not have it be something that stands in the way.
Yeah. Well, you do an awesome job at that. So I can't wait for everybody to learn more like from you and about you and like how to do bookkeeping in their business and make it profitable.
Yeah, absolutely.
So really quickly, I have ownership interest in Speechy Side Up LLC and Tassel Learning LLC. I'm also an affiliate for Simple Practice and Meaningful Speech, as well as a member for ASHA. How about you, Rhian?
So I own RDT Support, which is the bookkeeping and accounting company. I also own a company called RDT Angels, which is an investment company. I am an affiliate for Gusto, the payroll provider, and I'm a registered IRS tax preparer.
Great, thank you. Okay, here are the learning outcomes for today, since it is approved for point one ASHA CEUs. We hope by the end of this course, you'll be able to describe at least 3 types of business entities. That's like the number one question we get, Rhian. Like, how should I set up my—
Oh, yes, me too. Me too.
Okay.
And I'm really happy to like talk about that stuff too, because people are always surprised. Like, I don't have an LLC, and it's like it doesn't matter. It doesn't matter. But anyway, we can talk about that when we get to it.
Okay, perfect. And then we want you to be able to identify who needs to send or receive a 1099, list 3 key performance indicators, and describe 2 ways to pay contractors or employees. So let's start off with the like number one question we always get, which is what are some ways to structure a business?
Yeah, so there's actually technically 4, but we'll just go with these 3 because most people are gonna be within these 3. So sole proprietorship is something that you don't have to necessarily register with the state or with the IRS. It's just you trading as yourself under your own name. You don't have to register anything. You may have to get licenses and things, obviously approved based on what you're doing. But in terms of registering with the state, there's nothing that you need to do. What happens then is you trade under your social security number. So when you file your taxes, everything goes as part of your personal return. The same with the LLC, which is what surprises people a lot of times. People are like, I have an LLC. Do I file a separate business return? And actually, no, you don't. The LLC is basically a designation that splits you personally from your business. So it's kind of like a separation barrier between who you are as a person and who your business is. Quite often, people with an LLC will have a business name that isn't their own name. Some people choose to have it their own name, LLC. But the LLC gets registered with the state. That is where the LLC is created. And then with the IRS, you can create what's called an EIN number, which then means you don't have to use your social security number. The business would then have its own EIN number. So you wouldn't have to give your social security number to anyone. You would give the EIN instead. The benefit of the LLC over the sole proprietorship, because it makes no difference in terms of taxes, the benefit really comes from the LLC being the name is registered in the state. So no one else within that state can then trade under the name that you've chosen. And also that it provides, like I said, that separation between the two of you personally and the business, which means in the unlikely event that someone were to ever sue you, they could only go after the business assets and they couldn't go after your personal assets. So in your kind of industry where you do have a lot of interaction with the public and you probably want your name to be secured, it normally makes sense to get an LLC registered. Like I said, it doesn't provide any tax benefits as such, but it does provide you just with that peace of mind and knowledge that you're not going to have to give your social security number to all your clients. You're going to use an EIN number instead. And that if something were to happen, it is kind of kept separate from you as a person. The other thing you can do then once you have an LLC is this S-corp election. That normally becomes beneficial around 60,000 in profits. So your sales after your expenses. The reason for that is that does have a slightly different tax benefit, but typically you have to have earned enough before we get to the point where it saves enough for the extra thing. So you have to have an LLC to be able to do the S-corp afterwards. So again, the LLC is kind of a stepping point through to the next step of you growing your business too. There is a fourth one, which is a C corporation. Not many people, especially kind of entrepreneurs and solo startup businesses, will typically do that because it does have a double taxation, which is normally secured for people who want to have more than 100 investors or a kind of bigger corporation where you have a lot of shareholders. Most people, like I said, will fall into that sole proprietorship or the LLC level. And then when you get big enough, we'll do the S-corp election to be able to kind of save in taxes at that point. But again, it gets registered with the state, and the only thing that gets registered with the IRS is an EIN number.
Okay. Wow, I feel like you just simplified something that is so difficult for people to like understand. Like it makes so much more sense now. I do think, or maybe, and you can probably verify this because I know you serve people in all states. Do
Mm-hmm.
all states allow you to register as an LLC, or are there certain states that don't?
No, all states will allow you to register as an LLC. Every state has a different process, a different fee structure. Some states you have to do like an annual renewal. Other states it's just a one-time fee up front. So you'd have to check either with your tax preparer, your accountant, your legal team, or your specific state to see what the requirements were. But you can register in every single state.
Okay. Is there something called a PLLC too?
A professional LLC, yes. So to get a professional LLC, you have to have a qualification, a job qualification. So like you guys have, that basically just it does the same thing. The LLC still exists in the same way. It just means that you have that professional qualification to back up your LLC. So at the end of the name, instead of saying LLC, it would say PLLC, which gives you some extra credit and some extra like brand kind of benefit for showing that you have those qualifications. It also shows that then your LLC is linked back to that qualification that you have.
Okay, great. Thanks for clarifying that. So, what should SLPs know about 1099s? There's a lot. I don't think you know this, like personally, maybe you do, but in our field, there is this huge push for SLPs to start contracting
Mm-hmm.
directly with agencies. Let's say it's a school
Okay.
district. Most of the time, it's a school district. So instead of like being an employee of a middleman who has contracted with the district, SLPs are now like directly contracting with the district and having like a 1099 from the district, not a W-2. So that's
Okay.
one way, right? Like, so they're receiving in that end. And then you have here, like, if they are contracting out, let's say like they're not doing like therapy related contracting, but it's more like how, I hire Nicole as a VA, or I hire somebody to do social media or ads. I issued them a 1099. So I guess if we could
Mhm.
talk about both, that would be great.
Yes, let's do the first one first. So if you're going to be hired by a school district, for example, and the reason that the school district is doing that is because when you're a 1099 employee instead of a W-2 employee, the employer doesn't have to then pay the payroll taxes that come along with being an employee. That is Social Security and Medicare tax and any state kind of unemployment taxes. So it's cheaper for them to hire you as a 1099 than it is as a W-2 because they don't have those overhead costs. However, what that then means for you as a 1099 contractor instead of a W-2 employee is if they're not paying the taxes for you, you have to pay it on your own behalf. So one, they're not holding any withholding for you. So you're going to be responsible for the income tax on that as well. But two, they're also not paying the Social Security and Medicare taxes on that as well. So you're also going to be liable for the self-employment taxes. So when you're negotiating or discussing like am I going to be a 1099 contractor or a W-2? It's always worth noting that the 1099 rate will most likely be higher than a W-2 rate because you're going to have to pay the taxes out of that. Whereas if you do a W-2, it's costing the employer more because they're going to pay the taxes for you. If they pay you over $600 during the year as a service provider, and they pay through like Venmo, cash, check, anything that is not through like a credit card processor, they have to issue you a 1099 NEC, non-employee compensation. That 1099 then needs to be reported on your personal tax return. However, because it is then self-employment income, it goes on what's called a Schedule C, which we will talk a little bit about later too. You can then also write off expenses against that income too. So if you had to buy supplies as a 1099 contractor, or if you had to travel and you want to claim mileage, or I don't know, but like I said, buying supplies while you were working for someone else, those then become eligible expenses, which you wouldn't have if you were a W-2 employee too, and they would be providing all those things. So the 1099 that you receive gets reported on your personal tax return, but you're also then able to record the expenses as well. In terms of you giving a 1099 to other people, so it's exactly the same thing as the school giving you a 1099 as an SLP. The same as you giving a 1099 to a VA or a social media manager, or just someone who helps you within your business. If you pay more than $600 for a service, so it's never for products, it's only for services, and you pay via cash, check, Venmo, Zelle is another one that people do a lot too. Anything that doesn't go through a credit card processor. So if they send you a link and you enter your credit card details and you pay through Stripe or PayPal, that doesn't count. This is only things that are paid for, like I said, Venmo, cash, check, bank transfer, Zelle. You have to issue a 1099 to that person at the end of the year. If you don't do that, the IRS can fine you. I think it's $235 per 1099 if you don't issue it for 2024. That has to be issued by January 31st. And all you need to do, someone like me can do it. I think you can do it online with certain sites. You get what's called a W-9 from the contractor that you're going to issue to. That piece of paper has their name, their social, or their EIN, again, depending how they're registered, their address, and then you just need to know the total that you paid them. And then that gets sent to them. They'll make sure that you're issuing it as you're required to, and that they then have to report it on their tax return. So it's kind of a way of tying things up to make sure the IRS knows who's being paid for what, and that everything is going on someone's tax return. So you're not claiming an expense that someone else doesn't claim as an income then.
Mm-hmm. Yeah, thank you for clarifying that. I feel like that definitely gives a lot of good information for anybody who's either considering contracting with schools or like paying a contractor. Like I didn't know that Venmo and Zelle like require this. I also like pay some of my contractors through PayPal and then Wave, which you might mention like later. So it's just like a simple fix. Like I now decided to like not pay Venmo and Zelle. Like I only do it through PayPal because it just takes care of that for me.
Yeah.
Thank you for sharing that. Okay. Anything else you want to share here before we move on?
The only other thing I would say, 1099s also have to be issued to any legal person that you send things to, any lawyers, I think regardless of how you pay them for legal people. And you should send one for rent too. So anyone that you pay rent to should also get a 1099.
Oh, interesting. Okay. All right. Perfect. So what is bookkeeping? What does it actually mean?
Yeah. Okay. So, I mean, most people have a general idea of what bookkeeping is, but ultimately, it's just a way of tracking all the financial transactions for your business that go in and go out. There's a couple of reasons why you have to do it. One, the most important thing for people is, what do I have to put on my tax return at the end of the year? What came in? What went out? That's what you need to put on your return. That is obviously a legal requirement of being a business owner. If you can't provide that information, then there's no way that you can complete the tax return properly at the end of the year. So we have to do it. There's a couple of different ways of doing it, which again, we will chat through later, but you have to do it in some way. Whether you do it through the year or whether you do it as a big catch up at the end of the year, you still have to do it to be able to do the tax return. The other side of that though is, yes, there's a legal requirement. Yes, there's something that we just have to do. The other side of it is learning about, well, what does go on in my business? How does money come in? How does money go out? How much comes in and how much goes out? And I think a lot of people talk about, the money that comes in. There's all these headlines of like, I have a six-figure business, and they're talking about six figures came in. They're not talking about whether they took home six figures, because that's the sales that came in. We still had the expenses that went out. And really, what the important part is for you is like, well, what was I able to take home? What was my income, as opposed to like, what were my sales? So there's that side of things as well, which then helps you to kind of plan things in your business, plan downtime, plan busy periods, plan what are my expenses and what do I need in my account so that I can cover those expenses going out. And just being prepared and being ready, but also understanding what your business does, how it comes in, what products sell well, what products don't sell well, what your expenses look like every month, what they look like every year, and kind of help you just understand the flow of cash.
Yes, absolutely. I feel like a lot of people, definitely myself in the beginning, it was like if I don't look at it, then it won't be so scary and stressful.
Hmm.
But it's actually worse. Like it's better to look at it and have a pulse on it throughout the year rather than doing it all at once at the end of the year and then, trying to find things. And the software that you've set me up on is
Hmm.
so easy and automatic. I think if anybody takes anything from this presentation, it's probably to start there.
Yeah, I think so. Just like make a process that is easy and simple. And that is very much what I believe in. Do not overcomplicate anything, because if it is complicated, you end up putting things off. And then when you put it off, it feels like a bigger, more daunting task. So you put it off more. And then before you know it, we're in January and you're like, I need to file my tax return. And all of a sudden you're having to go back through 12 months worth of statements. That feels like a massive task. So yeah, there's the benefit of keeping on top of it so you don't get to that point, but also the massive benefit that comes from looking at those numbers and not burying your head in the sand and being able to react or to plan and be proactive rather than reactive.
Absolutely. Oh, it's so funny that you mentioned like, I made six figures this year or
Oh,
like figures this year. Does that irk you so much?
yes,
Okay.
hugely.
Yeah.
Especially like I see people's books. It's like, I made six figures this year. And I'm like, you sold six figures this year. You didn't take home six figures. Because the other important thing to note is you pay tax on that bottom number as well. So even if you did make six figures, you may then be paying 20% tax on that too and taking home 80, which is still great. Like there's that's still an amazing figure. It's just the importance of understanding what that number means and not just taking it as like, yes, I sold 100,000. But if you had 99,000 in expenses, you only made $1,000, right? Which again, nothing against that, but as long as you know that that's what the case is and that isn't then a big surprise to you.
Right. Yeah. No, I just like got on my soapbox about this like 2 weeks ago because I was tired of like seeing on social media business
Mhm.
owners trying to sell things, like sell the dream
Mhm.
to people, saying like you can make 1 million or you can make six figures. And it's like, okay, but you're not disclosing the net. And then someone came
Yeah.
out like, yeah, like I made 1 million, but I only netted 15%, which is like what, close to 300,000?
It should be 150,000 on a million.
Yeah, that's like a huge discrepancy, right?
It
Like,
it is massive. Again, it's still a really good take home thing. Like that's great. And that's absolutely fine as long as you disclose that and you say like, yes, I sold 1 million, but I had to have 850,000 in expenses go out every year to maintain that then. Like that's a big different conversation then, because all of a sudden, instead of talking about like, yeah, I made 1 million sat at home doing nothing, if you have 850,000 in expenses that's going out, you're probably incredibly busy
yes.
paying bills and keeping people on task, and you're suddenly a manager as well.
Right, like that and so when you explain it that way to me, I'm like, that's personally not what I am interested in. Like, I
Exactly.
don't wanna manage 40 employees, like, I wanna be present with my family as much as possible, so yeah, it's just like everyone here just try to like, I know everyone here is very intelligent, business owners, like
Yeah.
just be a savvy consumer. I remember after I posted that and like was on my soapbox, so many people reached out and was like, yeah, like I paid, 5,000 for this program or like, 10,000 for this one. And I wish I never had because I could
Mhm.
have figured it out. Like there's so many
Yes.
resources, podcasts, YouTube, books, where you don't have to like spend all of that money just because somebody's promising you this much.
Yeah, I fully agree with you. That is a soapbox that I get on regularly as well.
Oh man, we could talk about that like all day probably.
Yes.
So, what are your recommended steps for setting up books?
Okay, so and I think it may be on the next slide or another one over. There's a couple of different options that we have in terms of bookkeeping. There's obviously good old spreadsheets, and I love spreadsheets, but at some point it's okay. We could yeah, there we go. We'll go there and then we'll go backwards.
Okay.
So there's good old spreadsheets. I love spreadsheets. I have a template spreadsheet on my website if anyone wants to go and download it. Um they're super simple. I love them. I love formulas. I'm a number nerd, so like spreadsheets just sing to me. They are great when you're small enough that it is just you and you can go in and you can enter a couple of transactions every month and you know what's going on and you don't have to, be thinking back to like, well, what did I do 2 Mondays ago? At some point, we kind of outgrow that system though, when we get busy, we get lots of transactions, or we end up having, more people involved and there's just a lot more going on. So at that point, I recommend switching to an online accounting tool. The three that I love are QuickBooks, Wave, and Xero. QuickBooks is obviously the one that everyone knows and loves. The good thing with QuickBooks, again, is that it's so loved. Most people know what it is. If you send someone a QuickBooks invoice, they get the happy feels. They're like, yes, I'm happy to pay through QuickBooks. It exists. I feel good about that. The bad thing about QuickBooks is it charges a subscription each month, which I'm very much for don't spend in your business if you don't need to. And the feature that QuickBooks is charging for, most people don't actually use. They're charging for like the inventory tracking feature, and they're charging for being able to track like billable expenses. Most people, most service-based businesses really just want the ability to track the transactions that are coming in and out. So for that instance, Wave is a free online accounting tool, which I love. So the same with QuickBooks, Wave, and Xero. What they do, they all connect to your business checking account through a secure connection. It has like read-only access to the statement. So it can't pull money. It can't tell the bank to do anything. It can just read the statement. Those transactions then automatically pull in to Wave, QuickBooks, Xero, whichever account you're using. So instead of you manually having to type into the spreadsheet the date and the description and the amount that was spent, that information is already there, and all you have to choose is a category to kind of group that transaction into. So was this an advertising expense? Was this a bank fee? Was this a contractor payment? So it cuts out the manual work, which means it also cuts out the risk of errors, the risk of duplicates, the risk of missing things, and just kind of makes things more automated, puts things in the right format, and also just simplifies things for you, hopefully, so that it then takes you less time to do your bookkeeping on a monthly basis too. So if we can go back to that other slide, which said like, what do we need to keep? Okay, receipts. I want to talk about receipts because everyone's like, what do I do with my receipts? And I have people who are on both ends, people who don't keep any receipts. And then I have people that literally keep everything and send me a folder every week of like receipts. So the official rule of the IRS is they only need to keep receipts if it's anything over $75. I would say they can change that at any time. So I would get into the habit of keeping receipts. What I would say is I do not like paper receipts. They get crumpled, they get faded, they get wet, they get shoved at the bottom of your purse, left in a car. You can't read them again. So what I typically have people do with me is like get their phone, take a picture of it, and then have a Google Drive or a Dropbox or somewhere, have monthly folders, and then just put it straight into those folders so that you're keeping the receipts. The only time that they are kind of needed is if you were to get audited by the IRS. To be honest, in this day and age, most things we buy have an e-receipt, I would say. If you're buying something from Amazon or if you have your Zoom subscription, all of those things you get an electronic receipts. We don't necessarily need to keep them. Obviously you can, but we can also log into those services and download receipts there if we need them. I'm talking about more of the physical receipts for if you go to a coffee shop and you meet with a client and you get like that physical hard copy receipt. Those ones, just get into the habit of taking a picture and putting it into a Dropbox. If you're using Wave, QuickBooks, or Xero, instead of the Dropbox, you can also put them straight into the accounting software that you're using so that we keep everything in one place. It's just finding a process and sticking to it and just being consistent with it. And before you know, you won't even think about taking the picture and not even taking the physical receipt with you, because the picture will do what you need to then. So that's receipts. Then we have income that comes into you. So again, if we're using accounting software, and those things will be pulled in automatically when the money is deposited into your account. Most likely you'll want to have an invoice system where you ask people to pay you as well. Each of those, Xero, Wave, and QuickBooks, have an invoicing function where you can send out professional invoices that have that payment link on the bottom. So people can pay via credit card, people can pay via ACH transfer or PayPal. That is making their life easier because they don't have to issue to you that 1099 at the end of the year because they're not paying you by cash or check. It's also helping you to kind of keep organized then on, well, you know, how much did I make? How did it come in? Who did it come from? Have they paid me yet, for example, too? When we have less electronic systems, it can be difficult to remember, like, did I invoice person B from 2 weeks ago and did they pay me? So yeah, we want to track the invoices and we want to track the payments that come in. Expenses also need to be tracked. So these are going to be things that you then purchase out. Like I said, Zoom subscriptions, Amazon purchases, supplies, this training, for example, because this is part of a business expense for you for growing your business. All of those receipts, like I said, if they're not electronic, we want to keep them somewhere in a Google folder, in a Dropbox, or in the electronic system, and we want to keep those. Expenses need to be grouped, like I said earlier, by category. So on the tax return that you do, you'll have the categories, and we probably want to stick to those as close as possible. So there are things like advertising, bank fees, contractor payments, dues and subscriptions, legal and professional expenses, things like that. So again, whether you're using the spreadsheet system or whether you're using the electronic system, we're going to be grouping those things into categories. And then the final kind of transactions that you would have in your books is what we call owners, draws, and contributions. This is whenever you put money in or take money out of the business. And the important thing to note here is that is not taxable income or a deductible expense. It is literally you putting money in and taking money out. So we want to make sure when you do your bookkeeping that we categorize those things as an owner's draw or an owner's contribution, and then it stops it affecting what that taxable profit figure is. One other thing I want to note there, so we have the income that comes in at the top, then we have your expenses that go out. The bottom figure, which is called the net profit, that is your taxable income. So whether you take all of that money out of the business, whether you take more than that out of the business, or whether you take none of it out of the business, that bottom figure, that net profit, is your taxable income. And so it doesn't matter if you've taken it, if you've left it there, that is what you're going to put on your tax return, and that is the amount that you're going to owe taxes on. That surprises people quite a few times because they say, well, I only took out 20,000, but I show 100,000 in profit, for example. You're still going to be taxed on that 100,000 because that other 80,000 that you've left in there is still classed as like available to you or accessible to you. The benefit of that is, let's just keep going with that example. If next year then you made no money and you took another 20,000 out of that business account, because the business didn't make any money, you're not going to pay any taxes, even though you took that 20,000 out, because you already paid taxes on that money the year prior when you showed the full 100,000 in profit. So you pay it on the year that you earn it, not when you take it out.
Okay. This is, forgive me because
No.
naivety. Like, why wouldn't somebody take almost all of the net profit out then so they can pay less tax?
So it doesn't matter whether you take it out. You pay tax on it when you earned it, whether you take it out or not. So that 100,000 that we're saying is net profit, you pay taxes on 100,000. If you've taken 20,000 out, it doesn't matter. You still pay it on the 100,000. If you've taken 120,000 out, you would still pay it on 100,000.
Okay. But it's like, is it more important then to like really account for the money that you're putting into it from your personal? Like, for instance, when I was working my full-time job and I was putting money into the business, it might have looked like, we were making like a profit, but really it was me just like funneling money in to keep the business going.
Absolutely. Yeah, absolutely. Because that money going in shows the expenses that it cost you to start the business. So you're going to have to earn that money back before you start showing any profit. So that's making sure that you pay yourself back first before you show any profits and therefore pay any taxes.
Okay. All right.
Yeah.
Thank you for that. I'm sure
Yeah,
it'll,
it's super important to track what you put in, because the other thing is in the future, if you ever came to sell in the business, they want to know how much you put in too, because then that determines how much of it was a profit from the sale of the business as well.
gotcha. Okay. That makes sense. Anything else you want to share here before we move on?
No, I don't think so.
So you talked about this a little bit. Is there anything else you wanted to mention about like the contracting in 1099, or do you think we covered it all?
I think we covered that. Just so yeah, again, if they're paid through anything where you enter a credit card, it kind of makes it easier for you because the credit card processor is going to handle that. They then get, or if you're being paid through Square, Stripe, PayPal, or QuickBooks, for example, you're going to get a 1099-K from the credit card processor then, which again you use on your personal tax return then too, to show what the income you made was.
Okay. Yeah, perfect. So what type of business reports should be generated?
Okay, so the profit and loss statement, some people call it the income statement, some people call it like a statement of activity, but the profit and loss statement is what you'll hear it called most often. That is going to be that document which says income coming in was 15,000, expenses going out, grouped by category, came to 10,000, profit down the bottom was 5,000. That's going to be your most common document that you're going to look at. That allows you to see what came in, what went out, what that taxable figure is at the bottom. The other thing you're going to have is a balance sheet. So this shows how the value of the assets that are within your business. So if you've purchased any bigger pieces of equipment, if you have cash left in like a checking account, if you have money owed to you from clients, all of those things are assets of your business. And then it's going to show the liabilities of your business. So if you have any business loans, credit cards, anything else that is owed out, that plus the equity that you put in or took out is going to equal. So it just shows us like the value of your business and how much is left in the business and what it's worth on the balance sheet. Sales tax. I did want to talk about sales tax actually, because if you're going to sell a physical product, so let's say you have a location where people are going to come and see you and you are going to interact with them within a space, and you decide, well, while they're there, I'm also going to sell supplements, or I'm going to sell, I don't know, a product that links, a book or something that links to the service that you're providing, you will have to charge sales tax on selling that physical product, depending what state you're in, if you're a state that has sales tax. And that and payroll taxes are the only taxes that your business will pay directly. Everything else will be paid on your personal tax return. So it's really important to keep track of physical product sales if you're gonna do them, so that you can track sales tax that you need to pay back to the state. Then the way that works is you charge sales tax, then you hold on to it until a point where you file the return with the state, and you pay that money to the state at that point. So you kind of hold on to it for a period of time. So the sales tax. So cash flow statements, that talks about how much money came in and how much money went back out every month. This is really beneficial because, there may be months where more does go out than came in. And it's just important to kind of look at that and see like, well, is that a consistent thing? So I'm constantly eating into the amount that I've built up in there. Or it was just a one-time thing and the next month it's going to go up. The important thing to know with the cash flow statement is it also includes the money that you put in and the money that you take out as well. So the profit and loss statement is only going to be money that comes from sales and expenses that go out. Cash flow statement is also going to include when you put money in, you take money out, or if you pay any kind of financing activities. So loan repayments, for example, are not a deduction for a business. You can't expense those things. You can expense the interest part, but the money that you're paying back to the person that you borrowed it from is not an expense of the business. That's classed as a financing activity. So those things are going to show up on the balance sheet and on the cash flow statement, but they're not going to show up on the profit and loss statement as an expense because they're not something that you can write off. In the same way that they weren't taxable income when they first came into you as well. Okay, accounts aging reports. This is going to be a list of people that are owing you money. So people that you owe money to, or people that you need to collect money from. Again, I think this is really important because it allows you to be able to track those things down or make sure that you're not providing future service until those people have paid you for the services that they already owe you for. It can also help you then project out, if you need to pay contractors, but you're waiting for money to come in, just helps allow you to see, once this comes in, that goes back out, what's left for you then. And then payroll records, if we get to the point where you have people on W-2 employees, payroll records are really important. And I would say, and again, I do partner with Gusto, but Gusto is just the best payroll platform that I have ever seen. And it really makes things so much simpler. When you start talking about people's payroll, you have a lot of people's personal details and bank fees and a lot more requirements for reporting to state and to the IRS. And if you're at that point, I would recommend getting a more substantial system set up to track kind of payroll records then.
Okay, thank you for sharing that. Do you want to share like your code for Gusto or?
I can do. I think if they're at that point, it probably would make sense for them to reach out because it's probably next level for like setting up different accounts and just making sure that they understand what are the requirements of having people, on staff then.
Yeah, that makes sense. And just a side note, I did have some product sales in December, so I wonder if we
Okay.
need to reconvene and talk about those.
Yeah, absolutely. Absolutely. And again, sales tax, it also depends what channel you sell them through. If you have if you have a physical location, you want to make sure that if they're paying through like a Square Reader or a Stripe account or something, that we have that turned on in that POS system that you're using. If you're selling through things like a Shopify site or things like that, some states get auto paid through those sites as well. It kind of depends what state you're in as well. So again, kind of specific to each person, but something to think about and then talk to an accountant about like, am I doing this right? Do I have it set up correctly?
Gotcha. Okay, awesome. So what does the IRS need? We're definitely perfect timing because I feel like this is going to come out like slightly after everything is due, right?
No, I think just before, we might be a couple weeks before, but again, regardless of whether you're registered as an LLC or not, sole proprietorship, so that top one should say sole proprietors, and it does, or single member LLCs. Those people, you need the income and the profit and loss statement, the income and the expenses. Those get reported on a Schedule C of your personal tax return. So it's just one extra form that goes through to that personal tax return, and then it pulls through to the front sheet of the tax return to show how much taxes you owe on that. So sole proprietors, single member LLCs, which most people typically fall into, profit and loss statement, file it with your personal tax return before April the 15th. You also need the mileage, the home office stuff, anything else that you're going to write off against the business for the year that you're filing by April the 15th. If you are a partnership, so if you started a business with someone else, at that point, things do change slightly because instead of you each being able to do the Schedule C, we need to create a business return, which gives you what's called a K1, almost like a W-2, but like a K1, which splits the profit then between the two of you. So it shows whether you're a 50-50 split, it shows whether one of you takes 75% and one of you takes 25%, but it shows what the profit and the expenses were, and then how much of that you need to report on your personal tax returns to pay taxes at that level. So again, you still pay the tax at the personal level, but you need the extra business return to split the profits between the two. The business returns have to be done by March the 15th to give that extra month then for the individuals to be able to file their personal returns before April the 15th. So you get the K1 by March the 15th to be able to put that in your personal return before April the 15th. Most people typically do it all around the same time. Kind of depends whether the same accountant is doing your business return and personal return. And then the same with S-corps and C-corps, they also hit the deadline of March the 15th. You still need the same info, the income and the expenses. You will also need a balance sheet at that point and to know how much you took out for yourself as distributions. If you're an S-corp, you also have to be on payroll. So there's also some extra stuff in terms of you get a W-2 and you get a K-1 at that point. But again, that's by March the 15th. And then you do it on your personal return by April the 15th.
Okay. Great. Thank you for sharing that. I'm sure people have follow-up questions on these things or like questions specific to their business. So I'll kind of,
Exactly. Yeah, I would definitely say a lot of tax information. And again, I can put a lot of information out on Instagram or Facebook or anywhere. A lot of the time it has to be brought back to your personal tax circumstance. So like, what is your tax household? Are you single? Are you married? Are you had a household? Do you have another job? Do you need to be saving 25% if you're doing withholding elsewhere? So always refer back to whoever does your taxes. And if you do them yourself, have a look at your tax return and figure out where it's going to fall.
yeah, no, that makes sense. So how much should business owners withhold and when?
Okay. So typically we say if you're a sole proprietor or a single member LLC, you want to be holding 25 to 30% of your net profit figure. So that is that bottom figure down the bottom, the income minus the expenses, the net profit figure. We want to save 25 to 30% of that. Again, this depends on your tax household. So when I was a single member LLC, I had my husband over withhold on his W-2 job so that he always kind of paid extra through the year. And then when we came to it, I owed just a little bit, basically. When I switched, so I'm now an S-corp. When I switched, I now do some withholding through my W-2s, and then we do extra through estimated tax payments. If you are a single member LLC, like I said, that 25 to 30% typically will be enough. It does depend on if you're in a state that has state income taxes, whether you don't have state income taxes, you may be able to save a little bit lower than the 25 to 30% too. Some people just like to save more because then they know they have it in there and they can take it out as kind of a bonus next year as well. So say 25 to 30%, but again, it is very specific to your tax situation. And if you want a more specific number, you can reach out and we can do an estimate for you, or you can talk to your tax preparer and they'll be able to give you a better number direct for your situation. The important thing to note here, if you expect to owe more than $1,000 to the IRS or $500 to the state, they want you to make that in 4 split payments rather than making one payment at the end of the year. They do that for a couple of reasons. One, they want the money through the year so that they can use it to do the other things that they need to fund during the year. 2, they know that it's more likely that people are going to pay 4 smaller amounts than paying one bigger amount, which is how I also feel. Like it's better for you to pay, let's say you're going to owe $10,000 in taxes. It's better for you to pay $2,500 4 times through the year than it is to wait until tax time and have to write that horrible check of $10,000 that goes out. Different people do it different ways. The way that we do is on a quarterly basis. So they're the dates that they're due. So Q1 is due April 15th, which is a little bit frustrating because it's the same day as actual income taxes are due. But that's April 15th. Then we have June 15th, September 15th, and January 15th. You can either take last year's figure and just divide it by 4 and say that's what we're going to pay because business is going to be similar to what it was last year. Or, like I said, you can reach out to your accountant. We offer this where we do tax estimates on a quarterly basis based on what actually happened in your business and have you pay actual figures rather than kind of guesstimates based on last year's amount then.
Is there a penalty if you don't pay quarterly?
There is. So if you owed in the year prior, they expect you to make estimated payments the following year. If you don't pay those, then yes, there is a penalty on your tax return. It's under the amount that you owe. There's a little figure. I can't remember the exact percentage off the top of my head. It's like 1/4% per month or something that it's late. But there is a penalty. So yeah, I would always rather people not pay those things if we don't have to. the other side of that coin is sometimes people prefer not to pay the taxes though, because they want to keep the cash to be able to have that cash flow and have that flexibility in case something else came up. So it's okay to do that as long as you know that it's going to cost you a little bit in penalty for not doing it. And hopefully you're saving it somewhere which has a high interest rate, which maybe makes more than the penalty for not making it.
Okay, that makes sense. So, what are some ways that like SLP business owners should pay contractors and employees?
Okay. So again, you could pay however you want to. The most important thing is that you're tracking what you pay. How you pay it is completely up to you. Um, the way you pay it will define whether you need to issue that 1099 at the end of the year or not. So if you have one or two contractors, you may be fine writing checks and giving them a physical check, once a month, twice a month, however often that is. As you get bigger, especially if you start to go down more of an agency route where you have lots of different employees, lots of different amounts, you may want to look into a more digital tool where you can do the direct deposits and have the money sent and structured so that it's easy for them to know what they're getting paid and easy for you to make the payment and easy for the 1099 process at the end of the year. There is a ton of different ways you can do this. We've already mentioned, like, you can have Zelle through your business checking account. You can do Venmo. The thing with Venmo, you should only use the business version of Venmo. When you sign up for Venmo, you specifically, when you scroll through and you don't read it, but you accept the terms and conditions, in those terms and conditions is a bit that says that I will only use Venmo for personal use. And that's the reason that they don't charge any fees for it. If they realize that you're using it for business use, they will just close your Venmo account down, full stop. And then you'll have to pay the fees to receive money and to send money regardless. So you might as well start with a business Venmo and just have it set up kind of correctly. Gusto does do W-2 employees, like I mentioned. It does also have an option to pay contractors. Again, it just comes with a service fee. But what it allows them to do then is have a system where they can log in and they can see their paychecks and see their documents online and just have a bit more of a professional look, especially if you're growing and like I said, you have more than just a couple of people that you're writing checks for.
Gotcha. Okay, that's really great. Nice like platforms for people to consider. And I didn't know that there was a business version of Venmo, so I'm going to check that out.
Yes, there is. It does charge. So most of the credit card payment processors all charge this kind of 3% fee, and they all say like 2.9% plus 25 cents or plus 30 cents. So just call it 3%. When people pay you, that 3% comes off the amount that you receive. When you pay other people through things like Venmo, you'll normally get charged the extra 3% unless they're a business and they're taking the 3% payment fee then.
Okay, that makes sense. So how should I pay myself?
Interesting. So again, I mentioned earlier, you're taxed on the profit of the business, whether you take it out or leave it in there. So however you want to transfer money from the business checking account to your personal checking account is completely up to you. It can be cash, it can be check, it can be a bank transfer if they're in the same bank, which most people normally do. If you're tied to a bank, you normally think, well, I have my business account with my personal account. Some people have it differently. However you move the money doesn't matter. The important thing to note is that you record it in your bookkeeping as an owner's draw, not as an expense for a contractor or payroll, because it's not a payroll expense. It's just you withdrawing money out. If you are an S-corp, things do change. And at that point, you have to become a employee of your business and a business owner. So you have to put yourself on payroll for a certain part, which we would use Gusto to do. And then we have to use the remaining part as owner's draws. And you would do that the same way you do with a sole proprietor or a single member LLC, where you just do the transfers between the accounts.
Okay. I did not know that about S-corp, so thank you for sharing that. And I think that's really good for anybody who's like considering that.
Yes, and like I said, 60,000 profit typically for S-corps is where it makes sense. The part of the reasoning of that is because of those extra expenses that you have to become an S-corp. So you have to put yourself on payroll, you have to have a business return. So we want to make sure that the tax savings are enough to warrant the extra costs that you're going to have. And that's why the 60,000 in profit is normally where it makes sense for that to be kind of discussed.
That makes sense. So what are your top tips overall?
Okay. Number one, absolute number one for anything, just get a separate business checking account. Even if you're trading as a sole proprietor, get a separate account that is dedicated to business. This will just make your life so much easier. Whether you're going to do a spreadsheet system, whether you're going to do an online accounting tool, whether you're not going to do that and you're just going to go with the statements at the end of the year, it makes life easier to just know that everything in that account is business income and business expenses. Whereas if you have to go through, your personal checking account and pull out all the transactions that were income and expense related to business, it's gonna make your life that much more complicated. You're gonna have that many more transactions to go through. That's the number one. If you become an LLC, it's also a requirement of keeping it for the legal separation. It's a requirement that the business account is separate from your personal account too. So just get into the habit of having that a separate business checking account. Say for taxes, like I said earlier, about 25 to 30%. I normally have people set up both a business checking account and a savings account at the same bank so that we can easily transfer. We run that report every month for the profit and loss, figure out what that 25 to 30% is going to be, and then just move it straight over to the tax account so that it's ring fenced away. You're not thinking about it, and you know that that is there for a reason, and it's going to be used when we make the estimated payments or the payments at the end of the year then. Set up systems that allow you to scale. So yes, just do that. Just start as you mean to go on. I think in the beginning is the best place, the best time when you have time to be able to get these systems set up. That is the time to do it. And then if that's what you've always done, it means that you don't have to kind of backtrack and forget processes that you've already learned. Have a system ready so that it can grow with you. And if all of a sudden 10 clients sign on, you have a way to invoice 10 clients. And you have a way to track the income that comes in and the expenses that go back out, and be ready for that next level in your business, which is kind of why I recommend the Wave tool first to people, because it just allows you that system ready for the next time. And then seek advice from professionals when needed. So there's so much information out there on the internet, and everyone can Google everything, and there is so much out there. Sometimes it's overwhelming, and you can research something and get 3 different answers from the internet as well. Always speak to the person that knows your situation and knows enough to be able to give you advice based on your topics, but also don't be afraid to outsource and have this not be something, again, that causes a roadblock to you, or that causes you to stress and therefore not be creative or not be able to kind of grow your business, because it becomes something that is just a constant worry and a constant thing that makes you think, no, I don't want to do it because I don't want to handle bookkeeping.
Yeah, no, that's great advice. I always hear when you're starting a business, like you want to invest in an accountant and a lawyer, like a legal
Mm-hmm.
advisor. Like there's no
Yeah.
skipping those steps. It's just so important for your business.
Yeah, I think so.
So when should I start hiring out? I know a lot of people like
So
talking about this, especially with school contracting, like they just grow so fast that they immediately like then have to start hiring out.
yeah, so I think it's kind of when you're at a point where you can't do anymore, when you feel overwhelmed. Burnout is a really real thing for self-employed people, and it happens very quickly and very, very suddenly as well for people. So when you get to a point where you think, well, I'm making money, but I'm kind of making as much money as I can right now, just me, there's nothing else that I can do. How do I then scale this? How do I then grow it? How do I make it so that I can maybe not work as much but take home still good money? So how do I profit from having other people within the business then? People always ask me, like, what's a good profit margin? And the honest answer is, well, it depends on you specifically. I can't even say it depends on industry or things like that. It depends on your business. If you're happy to take home 10% because you're not doing a huge amount, great. Whereas if you feel like, well, I'm doing all the work and I'm only taking home 10%, then does that feel right for you? It's really specific to you and your business and how you want the money to come in and where you want the money to go back out. And it's also okay to not grow it too, to just be like, no, I'm okay being just me and making a good salary every year. And being content. Do you want to grow it? Do you want to go through that conversation of having other people to manage and doing other things like that?
I love how you put when you hate it because I feel like every
You
business owner gets to that point. Like you love what you do, but there's certain aspects that you absolutely hate. So like those are good things to hire out for.
Absolutely. And there's so many people as well that now do niche services. So it can literally be something like social media. Like a lot of people don't like social media, but we know that we have to do it. There's so many people out there that genuinely love social media that it's a really great thing to start with outsourcing and figuring out, how can I remove this stress out of my business so someone else can do it? And then hopefully the goal is that they do it well enough that it pays for itself or even brings you in a bit more money because they're doing a good job with it.
Yeah, exactly. All right. So I included like IRS info on 1099 forms here since we talked about it quite a bit. And then we'll include your link to the
Okay.
profit template as well. Because I think that's a wonderful resource. I don't even know if I have access to that. So I need to get that from you too.
Okay. Yeah, you can just anyone can download that from my webpage as well as like a mileage tracker. There's a home office deduction tracker as well. There's a few little resources on there that people can look at.
Amazing. Thank you so much for that. And if anybody is looking to find and connect with you, where are the best places?
Instagram's where I probably provide the most kind of content. The webpage has a lot of info in terms of like processes and template documents and things like that. So that's always worth a check. But yeah, Instagram, I do try and provide a lot of kind of changes to tax laws info and anything relevant to things that are going on current time. So yeah, definitely give that a follow. And then if you want to email me, my email address is there, and I will always try and get back to you within kind of 24 to 48 hours. Tax time is a little bit busier, so it may be a little bit longer, but I still try and keep it down.
Yeah, you're really good at responding quickly. Thank you so much, Rhian. This has just been so eye-opening and like thank you for
Oh,
putting it into layman's terms for anybody that's, new to starting a business and this can be really overwhelming. I feel like you made it a lot less overwhelming.
good. And I feel there's a lot of information that we've spoken about. And again, a lot of it is so specific to um people's unique situations. So if anyone wants to kind of reach out, I do 15-minute like discovery calls where we can talk more specifically about individual things and what fits right for each individual then too.
Amazing. Amazing. Thank you so much.
Thank you.